The Missoula Organization of Realtors 2013 report released last week shows signs of new life in the local housing market, with sales of homes rebounding and the first uptick in building permits in 7 years. But there are also some interesting trends that are still showing the impacts of the 2007 to 2009 recession. One particular is the continuing impact on vacant lot sales.
Going into the recession, Missoula was growing. It was growing at over a 2% growth rate. We're down to about a 0.7% growth rate, which is a good growth rate for us. But a lot of lots were created, right? So there's sort of an oversupply of lots, and they're sort of oversupplied in the lot size and location, which isn't currently demanded. So what we saw was a decrease for 2 years in a row of 23 to 24% in the price of vacant lots.
Put into dollars, it looks like this. The median price of a vacant lot in Missoula hit a high of $87,000 in 2010, showing that delayed impact of the recession that was part of the western Montana housing market. That median price had slid to $50,000 last year, which is still lower than the median price of $55,000 in 2001.
Hindsight's a wonderful thing, but when you go into sort of worldwide recession, nobody can predict that. And so I think while we were creating lots at the rate that we demanded them historically, there was a big change.
And the report shows the old market will continue to have some impact on lot prices and supply. Before 2007, lots were larger and there were fewer available. The red-hot market before the recession led to smaller lots and more of them. But as with all segments of the housing market, that's part of the adjustment in these post-recessionary conditions to what's being described as the new normal. In Missoula, Dennis Bragg, MTN News.